The UK government is about to unleash the biggest crackdown on landlords in decades. And if you own property, or even rent, the changes could flip the housing market upside down. So why now? The Treasury is facing a £40 billion black hole in the public finances, and Chancellor Rachel Reeves is running out of options. With income tax, VAT, and employee national insurance already ruled out, the government has turned its eyes on one group they believe won't cost them many votes: landlords. Right now, most rental income is exempt from national insurance, but that loophole could soon close. The Resolution Foundation has proposed slapping a 20% NI charge on rental earnings, with an extra 8% surcharge above £50,270. For landlords, that's a nightmare. For the government, it's an easy £2.3 billion a year. Labour insiders have been clear. Property income is unearned revenue, and they're coming for it. But here's the problem. When you tax landlords, they don't just swallow the cost. They raise rents, or they sell up. And that's exactly what's already happening. Next, capital gains tax. At the moment, your main home is safe. You can sell it without paying CGT. But behind closed doors, the Treasury is reportedly looking at removing that exemption for high-value homes, possibly starting at £1.5 million. That would mean, for the first time, selling your own home could trigger a 24% tax bill if you're a higher-rate taxpayer. This would be a seismic shift. Labour swore before the last election that your primary home would never face CGT. Now, with billions on the line, that promise looks shaky. Then there's stamp duty. It raised £11.6 billion last year, but it's widely hated, seen as a killer for first-time buyers and downsizers. Reports suggest the government is seriously considering scrapping it. But here's the catch. In its place could come a new annual property tax. Homes worth over £500,000 could face a 0.54% yearly charge, with higher rates on properties over £1 million. So instead of a one-off hit when you buy, it's a permanent bill every year. Great news if you're buying cheap. Devastating if you're sitting on a London townhouse. And it doesn't stop there. Council tax is still based on property values from 1991, which means someone in London can pay the same rate as someone in the north, even though their home might be worth 10 times as much. Economists call it broken. Politicians call it unfair. And Reeves may be the one to finally press the reset button. But here's the danger. Sudden revaluation could wipe tens of thousands off house prices overnight. That's why experts warn reform has to be slow, phased, and cross-party. But with the budget looming, slow may not be on the table. Here's the twist. More than 1 in 8 MPs earn rental income themselves, including 43 Labour MPs and even 4 cabinet ministers. So while politicians profit from property, they're preparing to squeeze ordinary landlords harder than ever. Critics call it hypocrisy. Labour calls it fairness. The truth? It's about revenue. So what happens if these changes land all at once? Analysts say many landlords will simply sell up and leave the market. That means fewer rental properties, and fewer rentals means higher rents. Tom Bill of Knight Frank put it bluntly. When you tax an activity, you get less of it. And right now, the activity is renting out homes. Zoopla even warns that the uncertainty is already stalling the housing market. Buyers are waiting, tenants are nervous, and landlords are caught in the middle. Landlords are being painted as the villains, an easy target to plug Britain's financial hole. But the truth is, these reforms won't just hit landlords. They'll hit tenants, buyers, and sellers too. The next budget could reshape the housing market for a generation. And whether you own, rent, or dream of buying, what happens in the coming months could change your life. So, what do you think? Are these reforms long overdue? Or will they backfire and make the housing crisis even worse?